I'm Ashton Addison from Blockwest Capital for Investment Pitch Media and the Crypto Coin Show. And today on Blockchain Interviews, we have Brandon Brown, the co-founder of Fairside Network. Brandon, welcome to the show, and thank you for taking the time to come on.
Hey, thanks for having me, Ashton. Awesome show, super pumped to be here. You guys always have great content, so I'm happy to be part of that.
Thank you, and I'm excited to have Fairside on because I know you guys are working on some innovative solutions in DeFi that are necessary and I think might be the norm going forward as DeFi continues to grow and expand exponentially. And I would love to kick off our conversation, first of all, by just hearing a little bit about Fairside, what your team's solutions that you've developed, and then we can dive into those details.
Yeah, of course. So Fairside's a decentralized cost-sharing network, and we revolutionize everything that you know today about DeFi insurance. So cost sharing is basically taking a large group of individuals and actively sharing in the losses of others for a reward. And then ultimately, by design, the reward is higher than the amount of sharing that occurs on an annual basis. So to achieve that level of, that whole by design, to achieve that, what we end up doing is we've relied on proven century-old traditional insurance principles that allow us to basically offer this next generation of DeFi cover, which is blanket coverage. Mm-hmm. So just imagine like how impactful and exciting it will be for retail investors who are the most impacted by a hack, for example, to have like readily available blanket coverage, which is cross-chain, cross-project, includes multiple cover types, all from a single membership. You pay one low fee, and then it actually is cover that's designed to follow you, right? And so, that's the level of cover that is actually needed for the current, crypto investor, but also I believe it will usher in a whole new wave of retail investors into the crypto space. Because right now, there's a lot of activity and noise around cryptocurrency, but we don't see that everybody's gotten involved in it yet, right? Mm-hmm. And so I think that happens for a couple of reasons. One, people aren't educated on what crypto actually is, and two, I think that there's a lack of insurance. So when you bring this new level and comprehensive, approach to insurance, it's game changing. And so we, Fairside's cracked DeFi insurance, and we couldn't be more proud of what we've done.
Amazing. And yeah, you're right. There's still so many people to come in, and because DeFi is growing so rapidly, there's a lot of institutional money coming in, and people that have so much money involved that they need to have insurance. But for those retail investors that they hear about early stage platforms that are on DeFi that might even be an anonymous team, or they've heard of rug pulls, and I don't want that to be the main thing surrounding DeFi because it is so revolutionary, and that stuff's going to be there on the side, but it is a small percentage. But people sort of think, it's almost like if I'm going into something that's very speculative, it's very gambling, like I almost don't even need insurance, but you do. And what I've seen with a lot of early stage DeFi products is they have audits of the contracts, but people just think an audit is enough, and they don't really think about like insurance or think that they could actually get insurance for something that's more speculative or in DeFi. Maybe you can talk about like that psychological aspect of it and where DeFi is at right now and how the products may continue to shift as it becomes more standardized into DeFi.
Well, I mean, in my career, I'm a 12-year insurance veteran, student of the game there. Became like crypto fanatic over the last 5 years, and really developed Fairside with the team out of the like necessity for insurance products, right? Mm-hmm. So I spend a lot of time like in my career, understanding the retail buyer and the buyer of insurance, and they'll buy insurance for just about anything, right? They insure their most valuable assets, like everything in my house is insured, and and you just become like almost accustomed to the idea that everything is insured. And so to think that people wouldn't insure crypto assets is just not the case. There's just not available products, right? And that's how like pretty much happened to me. There wasn't an available product, so we set out to design readily available products. So to your point on psychology, though, I think the idea of being covered, one, allows you to sleep well at night, right? But the other idea too is it actually allows you to be free to earn if you feel comfortable that you're covered. And so like if you consider the idea, like you go into a DeFi staking site or some new project that's really exciting, and you look at it and they've got their audits and it looks reputable and everything seems to be in order, But how big of a bullet do you fire? You could be earning 20 to 100% APY, even more in some other sites, right, on other projects. But how big of a bullet do you fire? I personally know that I withdraw like how much I want to, ape into some of these projects that look so cool and are doing something pretty revolutionary, but I hold back. And if you think about like, if I had cover, would I do that? And how easily would cover allow me to earn more than just even the cost of cover itself, right? I think, so that's like one aspect to the psychology that I think just kind of gets skipped, that people are so used to insurance. And so not having it available, we can't all live here with how big crypto is today, right? We need new investors to come in, new retail to come in and interact, and to grow this thing into, a massive industry that it's meant to be. But everything needs insurance. Insurance is sort of like that financial layer, like that base layer, that, that financial primer. You need it in order to create like social and economic good and resiliency of the community. And so I think we're going to bring that to the market. And I think that that's going to, change the entire crypto industry.
Definitely well said, Brandon. And I'd love to dive a little bit deeper into the product to understand how people getting involved in staking, how does that work in the ecosystem in terms of investing into the platform, and then also being covered for losses and when insurance claims happen.
Yeah, so the way it works, so I guess we'll just kind of talk about user stories, right? So user story number one in the network is that you're someone who wants to back the cover mechanism. So you basically stake or bond your Ethereum to the capital pool, and then by doing that, you mint FSD tokens. The FSD token acts as a synthetic of the capital pool, so that when you remove from one large capital pool, when you remove Ethereum from the pool in order to pay out losses, there's a marginal decrease in the value of FSD, but we don't have to liquidate stakeholders because we don't pick projects. The days of like picking projects and which ones you want to back, those days are over in our network. Like the idea behind that too is, if you have to stake a specific project, you create a really high correlation to your assets and the risk you're meant to insure. And that concentration is absolute, which then leads to liquidation of stakeholders. And liquidation of stakeholders is a zero-sum game, because you basically, on one hand, you just take, for example, like if there was a loss to a project that was being covered, you just basically swap positions where now the cover, the insured is now protected with assets from the cover protocol, right? And so, but you liquidated someone to do that, so there was really no economic gain that was had. You just swap positions, and so that's really not like how insurance was meant to be created. And so the idea, in our network is that we're able to provide the economic and social good of insurance without liquidating stakeholders by using this one large diversified staking pool that we call network staking. And so network staking is just like the idea of staking the entire network. And when you do that, you create a very low correlation to the assets that you're meant to insure. And what happens is when you reduce that correlation of risk, you actually increase your capital efficiency of the network. And so, I estimate that, we'll come out of the gate about 5 times more capital efficient than any other DeFi protocol has. And we're conservative in our starting point right now, because using traditional models, you could be into the 40, 60 times, like of gearing ratios where we are right now. And we're starting at a position of 10 until we actually get to that point where, we have more of a robust network. We've got actual loss data, but we feel very comfortable with where we're starting at. So that's kind of like how the staking mechanism works. It's a 100% staking network. All FSD that is in the wild has been minted through the idea of bonding Ethereum to the capital pool. So, whether you buy FSD directly from our bonding curve, or you buy it on a secondary market, it's still in a staked position. So if you hold FSD, you're a stakeholder. And so by being a stakeholder, though, you can ultimately, connect your wallet to our site and then start earning rewards, because we're a circular, economy where all revenue generated from the network is paid back to stakeholders. In this case, anybody holding a token. And so, on the membership side, so that's user story number one. On the membership side, user story number two, you're somebody who wants cover. So in order to get cover, you come to the network and you choose the amount of cover you want, and you pay basically a fee or a premium based on the amount of cover you chose. And so your network fee just is determined by the cover amount. And so if I choose, so cover is based in units of Ethereum. So if I cover 10 Ethereum, I want 10 Ethereum cover. And let's just say that roughly covers me for $40,000, right? then I pay zero point 0.4 of an Ethereum to do that. And then now I've got cover, and it follows me whether I'm in the Avalanche ecosystem, it follows me whether I'm in Phantom or Terra or Near. It doesn't really matter where you've gone, so long as the projects that you are, participating into are, basically not named projects by the DAO in terms of what we intend to cover, but because we don't cover projects, we cover loss types. And so if we, low-hanging fruit for us would be to first make a DAO proposal to cover smart contract cover for any, project that has 2 public audits or say has been operational in the wild for 18 months without an exploit. Well, that opens you up to having, 500 to say 1,000 projects, like good reputable projects that members will come to Fairside Network to get cover, not for one project or 70 projects, but for hundreds of projects. And then the more diversified our membership pool really is, and where they're holding their, their coins or their tokens, then the more protected our stakeholders become. So that's just like one idea on how the 2 user stories would work together.
Definitely, and that makes complete sense. And I like that you're dispersing the risk and not exposing risk to one specific project. All eggs in one basket is never a good idea. I do like that. And maybe you can talk a little bit about the platform. Is that staking for both of those user parties? Is that already live, or where are you at right now?
So staking is not live at the moment. So we're in beta testing right now. Everything looks really good. Our audits, we have 3 audits complete right now. And now really it's just kind of making the polishing touches on the front end, making sure that there's no bugs in the system, and that it's the usability is as good as it can possibly be when we launch. But what we're going to do is we're going to offer whitelist. So we have an IBO, right, our initial bonding offering, which we're going to offer to our community inside of our Telegram. So basically those that join our Telegram group, there will be a link there in the coming days to join the whitelist. And then what we'll do is we'll basically offer the bonding curve to our and to our community before general public can launch. And that gives you the ability to mint FSD tokens at the lowest possible price.
Amazing. And yeah, you mentioned that at the beginning, talking about minting FSD when you lock in funds. Is that the main, Fairside governance token? And is that the main functionality, or are there other functionalities within the ecosystem as well?
So FSD is used to pay your membership fees. It's used to pay your staking rewards. It's used to pay tribute fees, which tribute fees are something that we reward our stakeholders with. And so if you're a stakeholder in the network and so there's no lockup periods because we're not specifically associated to any particular project, you can unstake so long as the pool has a certain level of capital that we need. And so you can unstake at any time. But when you do, if you withdraw Ethereum from the capital pool, we have mint and burn functions. Mint is when you deposit, burn is when you withdraw. So we're a continuous token supply in that model where, the supply will come down when you burn your FSD in order to withdraw the Ethereum. But when you do that, you pay a tribute fee to all other stakeholders of 3.5%. So that tribute fee is then paid to the stakeholders that remain in the network, basically for their conviction in staying inside the network. And so, that's another way that FSD is used. And then also FSD, is used to build your conviction score, and everyone who's holding FSD is building a conviction score, which basically determines, your voting power in the network, your rewards position in the network. And so what it does is you vote your conviction score, and you need FSD to have a conviction score. So in a sense, it works for governance as well in that way.
Amazing. Well, I'm looking forward to that launch. I'd love if you could give some more hints, for the roadmap in 2022 and where you and your team want to be by the end of this year, and maybe a hint on how big you think DeFi will grow in 2022.
Well, I think DeFi is not going to stop growing for years and years. 2022 is just the start. We've only been really at this for a couple of years in DeFi, really to speak of. So I think that there's, decades left to go in DeFi. But in terms of what we have on the roadmap for 2022, of course, we're going to launch the bonding curve and basically fill the capital pool with the underlying capital we need to launch cover. Which we expect to happen in February. If we launch the bonding curve in January, we expect cover to go live in February. which will be super exciting and game changing to be able to do that and offer this level of cover. So that will be exciting for 2022. But we also say this is the retail driven version of our product, where we intend to be high frequency and low severity, where we intend to pay out a lot of claims to a lot of people on a low severity. So we sort of limit the amount of cover that any one person can have. And the reason there is that we want to make sure that one person doesn't have an overwhelming negative effect on the capital pool, having too large of a position. And so, and that will scale over time to where we increase that level of cover from 100 and beyond. But in terms of the network itself, this is, this retail-driven product. We've got plans for a protocol-driven cover where protocols can come in and buy cover. And really what I see there is, and what happens in traditional insurance and traditional finance space today is like there's a coordination of benefits that happens all the time. And I think, it might become unreasonable for DeFi protocols to cover hundreds and hundreds of millions of dollars. It might become cost prohibitive for them to do that. But if you have like both products working in conjunction with each other, where as a DeFi user, I just can interact with protocols and know that I have my own cover and it's going to cover me in the event of a loss. But then also protocols have cover, and if a protocol is not fully covered, the protocol I would assume that would be taking first position of the loss, right? And if they don't have like full like coverage position, then the members could come along and make a claim on their their retail product, their personal product. And I think that's a really great place to live, because I don't think one method of insurance is going to prevail in terms of whether it's all protocol driven cover or whether it's retail driven cover. I think they need to live together. But that's kind of the way I see the market coming down the road here.
Love it. Thank you, Brandon. And for the viewers that are looking to get involved in Fairside and learn more about it before the launch, you mentioned the Telegram. Is that the best place, or are there other places that they can get involved with Fairside?
Well, Telegram's a great place because I'm personally very, very active in Telegram. When you have questions, we've got admins, but I'm always right there to answer them. I'm always very active in there. So I try to be as accessible to the community as I can be. I feel like when it came to investors, right, I spoke to every investor that came into into the early staking of Fairside, and the ones that are kind of early staking into Fairside right now. I've spoken to everybody. And so I want to be like as accessible to the community as I can be. So I intend to be just basically active on Telegram all the time. Anybody has a question, I'm going to be there to answer it. So that's one way I think you directly can interact with myself and the entire rest of the team, which just in terms of the team, just to kind of give you like, we have created the best team in all of DeFi when it comes to producing a product like we aim to produce. We have, there's amazing teams, but when you're talking about creating DeFi cover, we have like you couldn't be more proud of the team we have. I mean, our core competencies like in insurance and actuary, regulatory positions, insurance products, and then also to have the whole team that can be super, that are just like killers in the space of blockchain and biz dev and security. Like we just kind of like really created the whole package when it came to delivering on Fairside. So so that's one thing I'm excited about. And but to kind of get back to your question, I just we also have a Twitter where you can get information, and we put a lot of stuff out on that. And then also just if you're wanting to just read information, then our website fairside.io. There's really robust Git book, FAQs, lots of stuff in there.
Amazing, and thank you for the details on the team, Brandon. It's great to have experts outside of blockchain in that native industry and insurance and in blockchain as well. And I will leave all of those links that you mentioned there in the description box below for the viewers. And all the best moving forward in 2022 and beyond with Fairside. I'm excited for the launch, and let's follow up in the near future.
Sounds great. Thanks so much for having us. Really appreciate it.